Hello, everyone. This is Noah and John. We are from UrbanDigs. It is Friday, so you're going to get your Manhattan weekly market update. John, let's get right to it. I'm looking at supply right here. We came in at 91.37. It seems like we're busting out. Show me the chart.
No, there you go. And this is a 4% jump. I mean, that's a big number now. We're kind of over 9,000 on supply, so that's a little bit concerning. We're approaching those all-time record highs. Just got to keep an eye on it from here.
Yeah, we're playing with the big boys now. We're playing, and now's the time that we're going to find out if we break that 9,600 level. So let's keep an eye on supply. Let's keep an eye on breaking that down on weekly and see if we're powering up. All right. Switching over to pending sales. Pending sales came in at 1738. That seems like it's going up, but show me the chart, John.
Well, there you go. It's 6%.
All right, not bad.
More. Yeah, look, that's a good tick up in pending sales. And again, this is a pipeline number, so when this does start ticking up, it's going to tick up a little bit faster than supply does. So that's good to see in terms of pace. But it'd be nice if it ticked up more.
That would be very, very, very nice. And let's remind our users that there's an ongoing bet between the two of us over under 2,000 by the end of the year. And we just popped up quickly over to 1,700. This was in the 1,600s when we talked about that. I know that. So you're making me a little worried I'm going to lose that bet, John.
Oh, well, let's see.
Switching over to the dashboard over here, let's take a look at the weekly numbers and see how we're doing. I'm going to 1 week active, 1 week active. How many do we bring in? Ding, ding, ding. The number's 529. That seems high, John. Show me the chart.
There you go. That's another week over 500. That's like the fourth week or so in a row, 5% more than the week before. So,
yep.
There's only so many plus 500 weeks the market can absorb before, prices start suffering. So we may be getting to that point, but comes down to where contracts are.
And this is what's powering supply, might I add. So this is how you break it down. 529, mental note in your head. If you want to keep track of whether or not supply is going to be powering up or powering down, you keep a look at this 1 week number. If you're looking at that and that goes to 600, 650, or wherever it may go, you know that supply's got that power to keep going. So we'll keep an eye on it for you. Let's switch this over to contract sign. 1 week contract sign. Where are we? 148, John. Show me the chart.
That's a drop from where we were last week. I thought we had burst out of the range last week. I was getting a little excited. We came right back to the range, but we're still in the range, which I suppose is okay, all things considered. I mean, if you have a student in the New York City public schools, this was your first week trying to wrestle with all the remote learning, so that may have put a damper on things. But it'd be nice if that was higher, I'll be honest.
Yeah. And this is the time that we told everyone is when this stuff usually starts. So let's just be very honest. We're at the end of September right now. First, the stuff comes on, then the stuff goes to contract. You need that period of time. So if there's deals cooking in the streets right now, we're not going to know about them until about now. So we're going to keep an eye on it now. For the next 3-4 weeks, John, we got to keep an eye on this. If this is not busting over 200 in the next 4 weeks, I'm going to be a little concerned. Okay. So we'll talk about that as we go. Now, listen, I got some really good stuff, John. I got some really good stuff. All right. We're going to break this whole COVID situation down. All right. First off, I want to tell everyone that there was 2,142 deals. I'm sorry, 2,152 deals that have been signed since March 23rd. Okay. 2,152 deals. If you break this down on how many deals were signed every single day this year, I did the whole year here. Okay. This is what the chart looked like. So when I break this down and I take a look at this, here is your shutdown, obviously, right? And that's March all the way through, looks like the beginning of July.
Right, very clearly depression there.
Complete dislocation of the market, no liquidity in the market. I mean, this is just deal volume not happening. So if you were a seller during this time, if you were a buyer during this time, this is when you probably got the most extreme deals, right? Where were we before? We were probably in this area up here beforehand, right? And we just fell straight down to the shutdown level. So now here we are in the reopen and we're looking to analyze the rebound. And, we've been talking about how it's been a little bit lethargic, a little bit sluggish. I mean, we're rebounding, but it's not a lot. And it looks like we're like a kind of halfway levels. We're halfway up from that level that we got in the shutdown. So we bounced, we just didn't bounce a lot. And this is a good visual to take a look at it and kind of see it. So now what we're going to do, John, we're going to break down, John, these 2,152 deals and tell everyone what are the deals that have been signed during this COVID crisis, right? So here it is, right? Here's the breakdown. Here's by bed count. I'm going to try to whiz by this, okay? We will include these charts in the email. First off, I see 3+ beds at 18%. which tells me 82% is under 3 beds. Okay. So the majority of the market has been the lower end, which we pretty much know. 2 bedrooms and under is pretty much 82% of the market. Now, again, this is all of the contracts signed since March 23rd. Okay. By building age, only 9% was new development. 91% is resale, John. Prop type, I'm going to break it down by prop type. Co-op is 61%, almost 62%. Condo, 36%. Townhouse, only 2%. Okay. And finally, price point. Everybody loves price point. This is interesting. 51% under $1 million. And we're going to go into this. We're going to go break down the $1 million sector. That's going to be in a future weekly report. We're going to focus just on the lower end and see what's going on there. But 52% over here, 26.5% over here. John, you got 78% under 2 million.
Yeah, and this jives a lot with what Jared Anton was saying on the Talking Manhattan podcast from a few weeks ago. And a lot of the clients they're seeing are people who live in New York, work in New York, and it's their primary residence. And a lot of that tends to be the 2 million and under co-op. So no surprise there in terms of where the dollar value and transaction value volume is.
Right. Look at the 10 million plus sector, John. 1.1%. 1.1%. So I mean, if you happen to be in that sector, I mean that's the illiquidity that was hitting the market. Now, okay. Let's just break it down differently now. All right. Let's look at closed. What closed, right? 2,152 listings were closed. All right. When I look at closed, I believe the number was about 473. Okay. Was the number that closed. Now that is of the listings that we had of contract signed. So 2,152 since COVID, 473. You can see we got about 1,700, just under 1,700 of those left to kind of close. Let's break down those that closed, right? And when I do that, studios were 15%, 1 bedrooms were 35%, 50% of the market was 1 bedrooms and under, okay? Add in the 2 bedrooms, you're up to 83%. So this is gonna echo what we saw before, obviously, right? 82% was 2 bedrooms and under. When I look at building age, 9.1%, similar, very similar to what we saw in contract signed. Property type, 53% co-ops, 44% condos, 3% townhouses, okay? By price point, much of the same, 52% under the million. Now again, these were closed listings that had a signed contract March 23rd or later, okay? So these were kind of like COVID kind of contracts. 52% under $1 million. Half of the closings are under $1 million, John. 26.2% 1 to 2 million. 76% under 2 million.
Mm-hmm.
Okay?
It's very
now, yeah, I can keep going, but you can see the chart, all right? What's most interesting now is let's just say how much of a listing discount did you get in those closed deals? This is what everybody wants to know. Of the 473 deals that closed, okay, that we had contract signed information for, there were other closings that happened that didn't have RLS accuracy. That's not included here, right? Let's break that down and show the listing discount. How much listing discount did they get from the original ask? And this is average listing discount. And let's start from the top. If you were a studio, you got 8.8%. If you were 1 bedroom, you got 8.2%. Think of it as a buyer discount, right? 10.3% for 2 bedrooms, 13% for 3 bedrooms. Okay, that's pretty much in line with what you would expect. And if you're in those sectors, those are the guidelines you should be looking at. Co-ops, you're looking at 9%. If you're a co-op, generally speaking, you're around 9%. Condos, just over 10%. Okay? Quite frankly, I'm surprised condos isn't higher. Townhouses, 17%. Makes sense. Townhouses in a much higher price point got hit differently. Resales versus new developments. Resales, you're giving a 9.6% discount. New developments are at 11%. Always remember, new developments are not inclusive of concessions, Johnny. This is just pricing. Okay. Finally, price points. Under $1 million, 8.4%. 1 to 2 million, 9.4%. 2 to 3 million, you're getting an 11% discount. 3 to 5 million, you're getting a 15% discount. 5 to 10 million, you're getting a 19% discount. I mean, this is just pure data, John. Okay? And crazy enough, the 10 million sector, because there's not many of them, there's probably 4 or something in there, right? 8.4%. So it's really, really telling when you break everything down to see, and this is why we're telling everyone, it's not one price point, it's not one sector. There's so many different markets going on right now, and you got to put yourself into your market and analyze the market. This is the first look at closed deals if you were signed a contract March 23rd or later.
Yeah, no, it's very interesting. And I think a lot of it jives what we saw earlier. And it's interesting, you look at the townhouse and you see 17.1%, whatever it is. And it seems like that's a giant bar, but if you think about townhouses in general, they normally have a significant listing discount simply because of the fact that each townhouse, unlike a co-op or a condo, is a unique entity. So that's really not surprising. And it's, you see that big bar. I don't think that's anything to be shocked about. And the same thing with, new developments. You think, wow, 10.7%, there's a deal there. But, don't forget, these are only new developments that we have contract information for. We actually have a listing price for, so we can go calculate what that discount is. So they could be even steeper in these sections. Same thing in the $10 million plus section. So it's interesting look. Thank you, Noah.
It's just an interesting look, right? And you bring up a good point, because if Jonathan Miller was here, he would say, like, where were you beforehand? 17% in townhouses, was it a 13% beforehand? Okay, so 13 beforehand, 17 now. There's an additional 4% difference between now and then. And that's how he would look at it. And that's one way to look at it. We're not looking at it in that way here. We're just looking at what it is as of right now. Once more data comes in, let's be honest, we have 473 deals. We have 1,700 plus COVID deals yet to come in. Let's get more data. Let's bring all that data in. In about 3 or 4 months, we're going to have the majority of those in, and then we could start breaking down and see where we are versus a year ago on a mass level.
Yeah, and I think that's a great ending point. Sort of a little bit of zen. It is what it is, and in terms of what your clients want to see, this is the data. So
that's right.
There's no
slice it,
way
dice
it. You got to go through it.
Do what you got to do with it. Thank you, John Walkup. This is Noah Rosenblatt. We are from UrbanDigs, and this is your weekly report. We will catch you next week.